Good evening, mentorship traders. Once again, 29th of April 2020, 8:30 p.m. Wednesday evening. As always, we will talk about the markets, Nifty, Bank Nifty, and few sectors, and then move ahead with our evening session. This evening session is going to be very different from our others because in this session, I'm going to talk to you about few unique approaches towards momentum, especially in this kind of a market. But before that, let's dive into the Nifty and see what's happening there. I have the daily chart in front of you here. And we were talking about this falling channel and we need a breakout above this. We got a breakout, a throwback, and then today a good breakout above that 9400 mark. This is the 38.2% Fibonacci retracement level, which comes at 9390. And if you recall that last week and before that, we've been talking that if it sustains above this level, then this possibility that the index will test this confluence of a Fibonacci projection and a Fibonacci retracement becomes fairly high. So are we looking at the psychological 10K mark? The answer is it's possible. Is it going to happen immediately? The answer is unlikely. Why? Because you would have realized that the index is essentially within a rising wedge. And this move today is essentially causing a breakout of that wedge, essentially a wedge failure. It is definitely stretched on the upside. And before it tries to attempt 10K, I feel that it's going to give us an opportunity like this or like this, which is a consolidation or a correction. If I take you to one time frame lower, if I take you to the 75-minute time frame, this is a 75-minute chart. And if you bring your attention to these two rising channels, one is slightly light colored gray, this one, and the other one is this pinkish color, this reddish color channel. And if I bring back your candlesticks or bar chart, look very closely. This is where the index broke below this channel, bounced back, faced resistance exactly at the channel bottom, bounced back today, and it is facing, I need to clear this, and it's facing resistance again at this channel bottom. Not only is this a channel bottom of the gray channel, it's a channel top of this red channel. So it's got a dual resistance kicking in at this level, which was close to today's high of 9600. If we draw retracements or Fibonacci projections, you will definitely find targets sitting up, coming up on the upside. There you go. The first level of target comes at 9611. Today's high was 9599, which is 9600. So 9600 is the short-term resistance, as we can clearly see from the 75-minute chart, which suggests that after this series of almost 9 consecutive positive candlesticks on the 75-minute time frame, before it decides to go further up, it will have to come down and make some room for momentum. And how far can it come down? Well, the bulls should be fairly comfortable even if it comes down to 9400 or breaches 9400 a little bit. Why I say so? I say so because this 9400 was the breakout level. A throwback retest of the breakout level is something very common. So let it come down. Even it comes down to 9400, 93, 90, 80, 70, 75, it's still okay. But if it slips below 9300, that is if it gives away a lot of these 9 consecutive candlesticks, that's not a good sign. So don't be extremely bullish for the next 2 days. You can be cautiously bearish or look for some opportunity on the short side. Neither really bearish because the market has given a good breakout. Swing traders who look to buy on a dip, wait for it to come down close to that 9400, 9450 mark. If it slips below 9400, be a little cautious. But if 9300 is getting tested, then it's a little worrisome. Then this breakout that we saw on the daily chart today, this breakout that we have on the daily chart today is under doubt once again. And then the rising wedge will start to kick in and the market might fall further down. So those are the levels you should work with for the Nifty. For the Bank Nifty, we're talking that the Bank Nifty needs to do a catch-up game. Until and unless the Bank Nifty does a catch-up game, it's very difficult for the Nifty to rally further. Now, for the Bank Nifty, there is scope of further catch-up because this is the 38.2% retracement Fibonacci for the Bank Nifty, which is 22,400. And it's fairly far away from it. The Nifty is at this level and it's taken it out. So the underperformance from the Bank Nifty continues due to few pockets of weakness. But on a conservative basis, we will expect the Bank Nifty should go further up and test the psychological 22,000 and close to that 22,400, 500 mark. If everything goes well and the Nifty rallies further and finds itself back to the 10K mark, that move will corroborate with the Bank Nifty close to 24,000, 24,300, 400. I don't see that happening even when Nifty finds itself at 10K, because this move of Nifty has been pushed, helped, supported by Reliance Industries. Let's take a look at the sectoral performance and we'll get some idea of this. What I'll do, I'll run a 1, 2, 3, 4, 5, 6-day rate of change. We would like to know which are the sectors over the last 6 days, how they have performed, outperformed or underperformed. So NSE all indices, I run this query and I get these sectors. And let's take a look at this. Nifty Private Bank, Nifty IT, Nifty Financial Services, Bank Nifty. Now we do see some performance coming up from the IT and the banking stocks. On the other side, it is the FMCG and the pharma which were rallying is now slowing down. Especially FMCG, if you can see, has created a symmetrical triangle kind of a pattern right at the resistance. So the move which was held by Reliance, Pharma, FMCG, these sectors are likely to slow down. They are slowing down. And the ones which are likely to do the relay race, the banks have started to pick up alongside Nifty IT, which is a good sign. If I take you to the same query, a report designer, and if I take you to, let's say, the Nifty IT, and if I run a query on that, you'd see that performance coming in from Just Dial, Mindtree, NIT Tech. So we're talking about the second rung IT companies, not the large caps, the mid caps. The second rung are the ones which are actually leading this move. Then we find TCS, HCL Tech, Infosys, Tech Mahindra, and then finally Wipro. Wipro is definitely underperforming to a great deal. Now this brings me to the point that a month or a month and a half back, I guess a month back, I did a video on YouTube talking about which are the stocks and sectors to look when the bottom of this bear market, if we call it a bear market, finishes. And the second run IT was the one, especially Mindtree and NIT Tech. And so far we see that in this bounce back, second run IT is performing. So keep an eye on stocks like Mindtree. This is for your investment portfolio. Let's do the same query for Bank Nifty. We would like to see if the banks have started to do a catch-up game. Which are the ones which did not? IDFC First, Bank Baroda, State Bank, PNB. So you can clearly get the hint. PSU not doing that great. Bank of Baroda, SBI is there, PNB is there. Bandhan Bank, Kotak Bank, IndusInd, RBL, and then ICICI Bank. HDFC Bank, the biggest heavyweight in the pack, you talk it Nifty or Bank Nifty, is midway. It's just given a move today with a 4.9% move. But it's essentially, I would say, Kotak Bank, which we spoke about last week, very good move. IndusInd Bank, RBL Bank, and ICICI Bank. I'll stick my neck out and always stay with Kotak, ICICI Bank, and HDFC Bank, and then maybe Axis Bank. Axis Bank has reacted beautifully from the Fibonacci target of 485, 486. So it's going to take some time before it moves next. When the PSU banks decide to catch up, which eventually it will, only look at one stock, State Bank of India. Clearly, the stock is trying to form a base. Clearly, it needs a breakout, and the breakout comes above 197, 200 on the daily charts. So those who are interested in banking, and especially State Bank and PSU, then always look at only one, which is State Bank of India. Before I conclude this market analysis, I would like to take you to FMCG. The reason why I want to run this on FMCG is FMCG and pharma were the one which led this move. Now they're slowing down. If they're slowing down, which are the stocks which have definitely slowed down and which are the ones which can continue the move going forward? ITC is one you can keep a close watch, because from a short-term perspective, the stock is completely range bound and it needs a breakout above 184. That's one stock you should keep a close watch. The others which can do good is Hindustan Unilever, though I did not expect it to dip below the 2280 mark. But Hindustan Unilever is one stock which is fairly oversold in the short term, and it can also give us a bounce alongside Dabur. I like Dabur the most because if I show you the weekly chart of Dabur, it has bounced back so viciously that it's almost come close to the life high. This is something which was done by Hindustan Unilever. Now, after this move, if I take you from the weekly to the daily chart, it is slowing down. It's holding above the moving averages. This is a consolidation. This zone is a consolidation. So 470 is a good support. I think it should hold, and then the stock will do its best to break out to a new high. So once the market slows down a little bit, the FMCG pharma move or the support comes in, kicks in, then I would look at Dabur, Hindustan Unilever. I'll take a look at ITC also. The others which are doing exceptionally well, Britannia, Colgate-Palmolive, Nestle, and Tata Global. It's termed as Tata Consumers now. So they, I think, will continue to be on good buy on dips. So let's quickly conclude this. Nifty has given us a breakout. We stay bullish. Yes, it's a possibility that the Nifty can go to 10K, but before that, it will consolidate. We are comfortable as long as 9350, 9400 holds. Below 9350 or 9300, this move is a failure. Today's move is a complete failure below, let's say, 9300. And in that case, you'll have the next fall, the next move on the downside. Bank Nifty is doing a catch-up game. The performance from the private sector banks have been good. Amongst the PSU, only look at State Bank of India. For the next 2 days, stay a little light on the long side. If you do long trades, quickly get out because index is getting stretched. On the short side, also, I would say keep your trades as limited as possible. Once, let's say, 9300 breaks, completely turn yourself and go full-time bearish. So that was the call on the market. Let's now move ahead and let me show you how one should calculate, gauge, evaluate the underlying momentum of the market, especially in this kind of a volatile nature. Let's start.